Okay, well, somebody who is familiar with investing early in companies is my next guest. He is Dixon Dahl. He's a venture capitalist who has put his money into everything from About.com to Clearwire, as well as a number of Chinese technology companies that have IPO'd in 2010. Dixon is the general partner of DCM, and it's good to see you again.
Nice to be back.
It has been a while. Okay, $50 billion for Facebook. Is that insane or what?
I wouldn't say it's insane, but I would say it's fully valued to be conservative.
But you have no reaction to my word insane. You don't think it's insane at all?
No, I actually don't.
$50 billion for Facebook, for a company that strictly makes money right now on general advertising.
But you have to understand the people that are paying these current valuations are looking at what they think it can be worth downstream, and there's an enormous amount of upside that still remains in Facebook. They have many, many countries around the world that they need to expand into. They have a huge number of new applications to introduce. They're just beginning to get involved in e-commerce and things like that. So I'd say the valuation is rich, but if you have a longer-term view, I think people will make money from the current valuation.
Rich. Biggest upside would be what, though? Biggest upside for Facebook?
Who knows? I think you have to go out and look at the biggest market cap tech companies today and use that as a proxy. If they execute flawlessly and continue to grow and pursue these international opportunities.
What, like China?
Yeah, well, China's going to be difficult because they've been prohibited from going into China for quite some time. But
isn't that the market for? I mean, when you're talking about international, isn't it China?
That would be one example, but they may not be able to do everything they want in China for reasons that we all know.
Okay.
The Chinese government controls that.
So then, what country would it be? Brazil?
It'd be any of the other big countries as you work your way down the list of the big GDP players from top to bottom.
Mm-hmm. You said execute well. You think they'll execute well?
I think we talked a little bit about that when I was here last time, and
yes.
So far they're doing a fairly marvelous job of executing. We have not heard of too many screw-ups or foul-ups. There have been some privacy issues from time to time, but so far they get very high marks for the quality of their execution.
That's a good compliment from you, Dixon. How does it change the game? How does Facebook change the game for you as an early-stage investor?
Well, we have to pay attention to the impact of Facebook on all the new companies that we're investing in. One example would be a company here in New York called AdKeeper, which is revolutionizing the way internet advertising is done. And Facebook will become a channel whereby AdKeeper and its customers can communicate rather than...
Right, and AdKeeper, just explain, is essentially what?
It's a very simple concept whereby display ads on the internet, which are sponsored by major brands, all the big names that we know, have a little button on them now. And so when consumers read an ad that they like, they just click on the button and it gets saved in a place called the Keeper, and they can go back and go through it in more detail, and that's going to improve the targeting for big ad programs very dramatically.
Right, but Dixon, okay, but what I'm saying is that is just an example of one of the companies that you're investing in. When you see Facebook valued at $50 billion, does it mean that you have to pay a lot more now to get in an early stage with other companies?
I think that in the really transformative sectors that people are getting excited about, valuations have no doubt gone up.
So social media.
Groupon, Twitter, Zynga, and so on and so forth. But I don't really think I call these valuations a bubble yet. I think they're actually providing transformative new services. You hear every day from the volume of coupons that Groupon is using that people are getting real value and they're generating real revenue.
Well, we are back with Dixon Dahl. He's the general partner of DCM. And Dixon, just a few hours ago this morning on our show, we had Scott Galloway. He's been investing in technology companies. One thing he said about Facebook, which I thought was interesting, is that he thinks going public for any technology company could be overrated. Do you take that view, or you must take an opposite view, right? Because you're big on IPOs.
Well, I try to take a balanced view on this. I think it depends a lot on the specific market that a company is in, the business model, the people running it, and so on. But there's no question that for a thriving entrepreneurial environment in the U.S., We need to have the ability of a company to successfully go public. I would actually argue that some of the activity that you're hearing about in Facebook and Twitter and Zing and people like that, those companies are, at least in some sense, already public. They're just not public for the retail masses. They're public. Their securities are available to sophisticated investors that are willing to comply with the SEC rules and so on. But what we need is more activity and more volume in our conventional IPO market. And in 2011, I am pretty confident that we're going to get another nice bump in the U.S. NASDAQ and New York Stock Exchange for tech companies.
Why?
Because the environment is improving fairly dramatically. The deals that priced in the second half of last year traded up 50% by the end of the year, on average.
On average, 50%.
That's an extremely healthy sign that presages, increased activity and ability for other new companies to get out in 2011. There's a very good pipeline of very high-quality companies that venture capitalists have invested in as far back as 8 or 9 years ago that are now mature and sophisticated and ready to go.
So you say about 60 to 70 VC-backed firms.
That's my guess.
IPO
That's my guess for 2011.
And 20% will be Chinese companies.
I think the last data I saw was that 22% of the venture-backed IPOs in the U.S. last year were Chinese, and I would expect the Chinese emphasis to continue. I think the percentages will be at least the same and maybe slightly higher. There's no real viable alternative for a company that's ready in China to go public outside the U.S. yet. And the stock exchanges here, both NASDAQ and New York Stock Exchange, are doing an excellent job of persuading these companies why it's really useful.
But you're not worried about their numbers? You're not worried about their data?
I think you have to. It's situation specific, and if they're really ready, they've been being audited by one of the big 4 or big 6 accounting firms, and that provides a level of assurance.
Some faith. Dixon, before I let you go, let me ask you about one stock or one company that you did get out of, Clearwire, but
Sure.
It's got a lot of news going on. I know you know these players. Craig McCaw stepped down from Clearwire. The company says that it might run out of cash by the middle of this year, I think. You got out, I know, about 3 years ago, but you know these players. I mean, what is going on with Clearwire? How did this happen?
Well, I think it's pretty predictable. The company was put together and backed by a combination of Sprint and Comcast. Google has some money into it,
right.
Time Warner as well. And Intel has a huge amount in it. I'm actually less concerned about Craig's departure than maybe
Wasn't
some others
Clearwire?
would be.
He was Clearwire.
He's the chairman of.
But I mean, but he's a mobile pioneer.
He has a lot of it. He's not going away. He is actually trying to, from my sources, create an environment in which the company has more flexibility, because there can be and have been some conflicts from time to time between the objectives of some shareholders. And so by Craig, who's such a larger-than-life figure,
right.
Stepping aside, I think it allows the company to be more focused, and that'll facilitate and enhance its ability to raise capital.
But do you think that it might get acquired?
I've seen the rumors about Sprint acquiring it.
But Sprint has said it won't, though.
I was going to say I don't have an opinion on that. I don't think that Clearwire is an obvious candidate to get acquired.
Okay.
It was designed to be a standalone company from the very beginning, and they've made good progress toward achieving that goal.
Right, creating that 4G network. Dixon,
yeah.
Good to see you.
Thank you.
Thank you for stopping by. Dixon Dahl of DCM Partners.